You don't need me to tell you crypto is noisy. Headlines scream, charts flash. Every day someone promises the next moonshot. But the real money, the smart money, moves in silence. They accumulate when others panic. They position while the crowd sleeps. Right now, one idea is quietly resurfacing across on-chain data and institutional pilots. Owning 2000 XRP could become a meaningful position, not because of memes or hype, but because of real utility, tightening public supply, and institutional demand that most retail investors don't see. That's not a price prediction. It's a state of the market. And if you understand the mechanics, you'll see why this could be a dream for those who act with discipline. Stay with me. We'll cover the signals, the real risk, and the exact steps you can take if you want to position smartly. First, let's look at the facts that matter. Point A, utility and real-world use XRP was built to move value fast and cheaply. Banks and fintechs trialed it to solve the slow, costly problem of cross-border liquidity. That use case didn't vanish. It evolved. Pilot programs, private settlement experiments, and tokenization projects keep showing up in quiet press releases and regulatory filings. When real money needs a bridge, a fast, low-cost rail matters. Point B, supply dynamics and hidden demand. Unlike many coins, XRP's supply mechanics are unique. A large portion sits in escrow. Institutional players often operate behind private or permissioned rails where internal settlement doesn't hit public order books instantly. That creates two pools of liquidity: the public market you trade on, and private institutional liquidity that rarely shows up in retail charts. That gap is the structural reason why public scarcity can be higher than it looks, and why owning a meaningful stack like 2000 XRP could matter later. Point C, whale behavior. You can actually watch. What smart traders watch isn't sensational tweets, it's behavior. Watch exchange reserves, watch large custodial transfers to cold wallets, and watch the flow of on-chain settlement patterns. When exchange balances decline and large wallets accumulate off exchange, you're seeing accumulation for long-term or institutional use. Whales don't shout, they move. If you're checking charts at 3 a.m., waiting for confirmation, stop. Whales don't wait for confirmation candles. They create the conditions that make confirmation possible. Point D, timing. Why now matters. Markets are cyclical. After a washout, institutions that want to be ready for the next advance quietly supply their corridors. If you're patient and you watch the right signals, you can position before the broader crowd notices. That's the difference between catching the rise early and being late to the party. So if the structure favors accumulation, and if whales are stacking quietly, what do you actually do with this idea? Don't worry, I'll give you a practical plan next. You should prepare like a professional. That means tools, discipline, and a platform that doesn't slow you down. If you plan to trade or build a position in XRP while watching other plays like TAO or SUI, use a single reliable exchange that gives you low fees, strong execution, and the tools you need to manage risk. I recommend BTCC, not as hype, but because it's a practical choice for serious traders. Here's why I mention BTCC and why it matters right now. When you want to act, execution and cost matter as much as the market call. Short, convincing BTCC details. Plug, you can paste in description register and get a 100 USDT coupon, a small sign-up bonus to help you start with an edge. Deposit 500 USDT or more, and you'll receive a 10% bonus in trading funds. Extra capital you can use right away. BTCC also runs trading volume rewards that lower your effective cost as you trade. If you want one place to manage crypto positions cleanly and react fast, check the BTCC link in the description. I'm not telling you to rush in blindly. Use that link only if you understand the rules and want a reliable platform for executing a smart plan. All right, platform in place. Now the specific steps. Step 1, the entry plan. If you believe in owning a meaningful allocation like 2000 XRP eventually, don't bet the house in one trade. Stagger your entries. Build position in tranches. Use limit orders into liquidity zones, and avoid market buys when depth is shallow. Whales buy quietly. You should too. Step 2, size and math. Decide what 2000 XRP means for your portfolio. For one investor, that's a core holding. For another, it's a tactical swing. Calculate percentage exposure and set absolute loss tolerances. If 2000 XRP at today's levels is an unacceptable risk to your lifestyle, scale down and plan to dollar cost average. Step 3, protection rules. Set stops you can live with and take profits at predetermined milestones. Use partial exits. Sell a slice if a target is met. Let the rest ride with trailing stops. Protect capital first. Opportunity second. Step 4. Watch these indicators every day. Exchange reserves for XRP. Large withdrawals to cold wallets. On-chain settlement patterns and notable escrow movements. Institutional pilot press and regulatory clarity. If 2 or more of these line up inside a week, that's a confirmation pattern worthy of a thoughtful position increase. And please, don't ask strangers on Twitter for your entry level. That's how people lose money and friendship. Step 5, play the long game with short game rules. If your goal is owning 2000 XRP as a strategic position, think like an investor. Plan for volatility, but set tactical triggers so you can act without emotion. Keep some capital in reserve for better entry opportunities. Compound your risk management muscle by practicing on small sizes first. If you want the technical reason why supply mechanics matter so much for a long-term thesis, like 2000 XRP, that's exactly what I break down in my next video. It explains the burn mechanics, escrows, and how limited visible supply can accelerate price moves. Watch it after this. Quick summary. Calm, confident. Close owning 2000 XRP could genuinely become a dream for many because of 3 structural realities. Real-world utility that institutions value, hidden or segmented liquidity that tightens public supply, and accumulation behavior by smart money. It's not a quick flip. It's a strategic position that requires patience, discipline, and proper risk management. If you want the supply mechanics behind why 2000 XRP could matter, watch banks are quietly choosing XRP over SWIFT. Next, I've linked it on screen and in the description. That video continues this story and shows the institutional side of adoption. Remember, if you want a reliable place to manage these trades, the BTCC link is in the description. The sign-up coupon and the 10% deposit bonus make getting started easier. Dreams don't become regrets because you were late. They become regrets because you never planned. If you're positioning for the long run, do it with a plan. I'll see you in the next video. See.